the paradoxical thing is, the better an academic background you have, the more likely you are to have a good job. Right? And therefore, the more hesitant you might be to give it up. As a repeat entrepreneur, or having had some of the experiences, you avoid some of the rookie mistakes, right? Because in a startup, there's so many things going on all at once, right? It is excruciatingly difficult. It is, and that's like the untold story of startups, right? Because most startups that get covered, including here, perhaps are, like post facto. You look at successful entrepreneurs and you talk about it, and that gets glamorized, but nobody goes and talks to the company that failed. It's kind of, this entrepreneurial journey is strange, right? On the one hand, you need this insane amount of confidence to say, I'm going to do the impossible or the difficult thing. But at the same time, you got to be very paranoid and very humble and very, grounded, saying, okay, what's not working and how do I fix it? At least what keeps me going is, it's sort of, when you focus on the big picture, the fact that you're going to build products maybe used by millions of people and create a lot of value and wealth for your customers and for your employees, I think that makes all the pain worthwhile.
Hello and welcome to Mint. You're watching Founder Diaries, where we speak to founders about their journey into entrepreneurship. Today we're speaking with Beerud Sheth, who has the distinction of having started and scaled 2 unicorns across 2 geographies. We will be speaking to him on how he did it. Welcome, Beerud. It's a pleasure to have you here.
Thanks for having me here.
Yeah. Tell us a little bit about your journey into starting up. I mean, after IIT, after MIT, you actually did a regular financial services job on Wall Street. What was that like?
Yeah, I think, so I had a great academic career. I studied computer science at IIT and MIT. But even when I got to the US, and, this was now in the early mid-90s, where India had nowhere near the sort of tech activity that it has here right now. But when I got to the US, I mean, it was just really sort of mind-boggling, right? I think you're exposed to so many other influences, lots of opportunities and so on. And I realized very quickly that I didn't want to be in academia. I wanted to be sort of in the entrepreneurial or business world at least, and so on. So I dropped out of my PhD program.
Oh, okay.
I did get my master's. But PhD would have been another 4 years perhaps. So I was like, okay, I'm going to, get into the business world. And I'd taken some business school courses while at MIT as well. So, I found Wall Street very interesting, very challenging. I mean, it might surprise you, but the financial services industry is also very, very quantitative and analytical. And it's kind of obvious now, but those were the early days of when they were starting to hire CS, math, physics people to model securities. Anyway, so I sort of ended up there. And so this is in the mid-90s. And, meanwhile, suddenly the internet happened, right? Netscape in particular went public. But even before that, we were the Mosaic browser. There were there were a lot of other things. I mean, having been in grad school at MIT, I was very exposed to a lot of those tech influences, but I was just surprised by how quickly they hit the mass market, public consciousness, and so on. So it was around that time that I started thinking, about doing something entrepreneurial.
Right. And I read somewhere that it was in a 2 BHK apartment in Jersey. Yeah.
So I think, so there were a variety of factors, right? So firstly, why I got started was, the internet was happening, and, there's this thing called the regret minimization framework, which means when you are much older, you don't want to have any regrets in your life, right? So when you're on your deathbed and when your grandkids ask you, what were you doing when the internet happened? Or now when AI is happening, right? I didn't want to have to say, I was doing a regular job, right? So there was one part of it. And then specifically, you have to find an idea that appeals to you, that you're excited about, passionate about, and I can talk more about that, but that's when I started. I think Elance was, so I founded the company called Elance, and it was a confluence of basically 3 of my formative influences, right? coming from India, I knew that there were talented people all over the world. But in New York City, you'd hear, people saying, "Oh, I can't find a graphic designer or something," right? So imagine if you could just connect the two. Given my tech background, I knew how transformative the internet was going to be and reduce the cost of connecting people around the world. And then given my Wall Street background, I knew that you could create marketplaces, not just for stocks and bonds, but even for illiquid securities like derivatives and so on. And you take all of those three things, and what you end up with is a global services marketplace, right? So anyway, that's how we came up with the idea for Elance. And then, even the name itself, right? Elance is a play on freelance.
Okay.
Right? Because, and it came from an article that, we read in Harvard Business Review right around the time when we were starting. It was by an MIT professor. It was called The Dawn of the Elance Economy, and about how the whole world is going to be transformed by freelancers being able to get together and work with each other. So anyway, so I think that's when we created the company, and we raised a small funding round, about $1 million, just really using my IIT alumni network connections. And then my friends brought in other investors and so on. So we raised $1 million from about 15, 20 people. And yeah, we started, it was a very modest beginning. My classmate from IIT, who became my co-founder, he needed a place to stay. So we said, okay, we'll get you the apartment, but why don't we make it a 2-bedroom apartment, and you can stay, at night, stay there. But in the daytime, it becomes our office. And that's how we started. And it was kind of funny. It was in a residential tower where, every day, over the next few months, we grew to about 20 people. So you'd have 20 people coming in the morning and then leaving in the evening, and our neighbors must have been wondering, what's going on here? But in New York or in Jersey City, where we were, this was the New York equivalent of a Silicon Valley garage, right? So that's how we got started.
Yeah, but even before that, did you struggle with having to leave a salaried job? Was that? Walk us through that, because that is a common hurdle for any founder thinking of making the leap.
Of course. No, I think it's, it's a risk, right? And in fact, the paradoxical thing is, the better an academic background you have, the more likely you are to have a good job. Right? And therefore, the more hesitant you might be to give it up. And I know for a fact that certainly a lot of my, IT classmates were wondering, what are you thinking? Why are you doing that? Because, it's, you'll have good jobs and so on. I think, I've always had this perspective, and especially when you're early on in your life, you can't simply just optimize for money or salary in particular. You kind of have to do things that mean something to you, that can have an impact. And ultimately, look, if a startup succeeds, arguably it'll generate much more, even in financial terms, can generate much more value, except that it won't do it immediately. It'll take, you'll have to sort of defer your gratification, right? And there's a fascinating book, by the way, called Grit, where they talk about how, the people with the most resilience and perseverance end up succeeding the most. And the way to detect that is, can they defer gratification? Meaning, can they go through a lot of pain for the pleasure to arrive much, much later, and so on. So I guess I must be one of those kind of people. But for me, it was, really, one is just the desire to, I like tinkering, I like problem solving, I like, the process of innovation, finding new solutions. So that's just something I liked. But then you also have the fear of managing, you need salary and cash flow. Fortunately, my wife was a dentist. So we lived, on her salary for a year. And we had raised the money and we were paying ourselves very little. But she was, of course, a real trooper. And she's like, look, get this out of your system, because if not, you're not going to be a happy camper. So, she was also very supportive in that sense. And I think the other two, maybe the last thing I'll say is, people end up exaggerating the risk in their own mind because we all have the fear of the unknown. But if you really think about it analytically, what's the worst that can happen? Let's say I try something, maybe for a year, it doesn't work. I'm still the same educated, qualified person. I could probably still end up getting the same or a similar job. But in some respects, I'll be much wiser or mature or would have learned a lot and probably might even get a better job because, you have some entrepreneurial experience. So, in reality, if you balance out the risk of doing something versus the risk of not doing something, right? And if you frame the problem that way, you might realize that, the risk of not doing something might actually be greater, right? So if you just stayed in your salaried job, but you miss out a phenomenal learning opportunity, you miss out some breakthrough, innovative, technology shifts, and an opportunity to grow a big business, then, there's that risk as well. So anyway, I guess...
How long did it take for you to get the payoff on freelance?
20 years.
Much longer than Gupshup.
Yeah. Well, yeah, it took a long time, yeah.
And scaling Gupshup certainly happened much faster than your experience with IITian.
Yes and no. I think that's also taken a long time. So I guess I've been, blessed or cursed with like 2 very long journeys. It's probably over 15 years now and still counting. Though the company has grown a lot bigger, even though, we haven't gone public yet. But I think what happens sometimes is, in the startup journey, the market has to be right? You kind of have to be right time, right place. And I can go more into it, but we are focused on the messaging industry. And traditionally, a lot of it was on SMS, but when WhatsApp introduced business messaging, which was much richer, much more interactive, it created the perfect opportunity for us to lead to hyper growth, that the business has been scaling a lot, expanded a lot, and things are going quite well now.
What would you say are the key differences between starting up in mid-1990s and, in your second stint?
I think the biggest difference was just me personally, right? In that as a repeat entrepreneur or having had some of the experiences, you avoid some of the rookie mistakes, right? Because in a startup, there's so many things going on all at once, right? So for example, when you're hiring a team, right, what kind of people to hire versus not. In the early days, you want you want more versatile people, and later on you hire specialized people. Or, sometimes you're eager to fill a certain skill set, but if that person is not a team player, that can be very disruptive. So you have to be willing to say no for now and then wait for somebody else to come along, right? That's one part of it. In fundraising, how to sell, how to articulate, how to explain to investors and so on, you're a little more experienced. And also the investors can see that you're more experienced. That helps as well. Negotiating term sheets and contracts, what to anticipate, what can be a problem down the road. So you can, it's sort of looking around corners, right? I think that's what, as an experienced entrepreneur, you can do a lot of that. And so on in many other aspects, even in sales, in marketing, and so on.
But the ecosystem has also evolved, right?
Correct. So, and then of course, the ecosystem has grown. Look, Silicon Valley has always been a very mature tech ecosystem. But in India, things have changed dramatically, right? And now, if anything, India is easily the fastest growing large economy with a lot of growth. And in particular, India has a very low baseline of technology adoption, right? Which means there's room to, we have to digitize the whole country, right? So almost anything you do, will get adopted. And, even basic kind of businesses are growing, let alone tech businesses, which can grow faster. So I think, today, there are still some gaps. I think there are still some shortcomings, but India now has a cohort of repeat entrepreneurs, which is great. Ultimately, we'll see what makes Silicon Valley special is a lot of experiences, a lot of repeat and multiple experiences, a lot of shared experiences, which means when you see something new, you have the ability to spot these patterns, saying, oh, it's a little bit like this, perhaps it can evolve like that, and so on, right? So the willingness to take risk is high because the past few risks that people took all paid off. Employees are willing and so on, right? So I think you need that sort of ecosystem maturity. I think India now is a little further behind, but advancing very quickly. Like I said, you have enough repeat entrepreneurs, you have enough savvy investors, and I think, but there's still a little bit of room to grow and to go. So
you clearly took to this really well, with both businesses. But were there moments of challenges where you felt that it's too hard and it's almost worth giving up?
Oh, of course, lots of challenges and lots of such moments. I think we've had multiple pivots in both companies, and kind of these near-death experiences where we almost came close to running out of cash, and and you sort of you're in a deep dark tunnel with no light in sight, and so on, right?
When,
and I think
when was that with Elon's?
Well, I think
the .com thing.
Certainly the .com crash was the first one, but at least then you had cash, right? But then even like 3-4 years later, when we needed to go get additional funding, but the market had dramatically worsened, the funding market, I think we had to do some structuring and so on. I mean, all of these were really, really difficult and painful experiences. I think even at Gupshup, we had similar things, and I think what I've learned now, I can say it with with a little more experience, but it was a lot harder when I was going through it, is that it's very challenging. It's very existential, because as a founder, as an entrepreneur, your whole identity, your reputation, your work, your blood, sweat, tears, and sometimes even your money is all tied into this business you're running. And then you're like, oh, wait a minute, if it goes nowhere, it's not just that you lose a job, right? You lose all of this, right? Maybe your reputation, maybe your money, maybe your sanity, and you have all these people depending on you as well. So that amplifies it, and your family is depending on it as well, right? So I think it is excruciatingly difficult. It is, and that's like the untold story of startups, right? Because most startups that get covered, including here perhaps, are, like post facto. You look at successful entrepreneurs and you talk about it, and that gets glamorized, but nobody goes and talks to the company that failed or that struggled or something else happened, right? Maybe they tried very well but struggled. So I think, and I think people should be aware of it. Also maybe in hindsight, I'm glad that when I started, I didn't know a lot of this, right? So when you're ignorant, ignorance can be bliss, right? When you just have no idea, you're like, okay, how bad can it be? Let's just go ahead and do it. But then when it happens, you're like, okay, it's really bad. And you have to, I think maybe what helped me, just develop, I always had this approach or mindset of, look, I'm not going to worry about the things I can't control. I'm going to focus on the things I can. And you kind of have to say, look, I'm the same, let's say, smart and hardworking person, with good intent, and I'm trying to do my best. And it is what it is. I mean, you can't, and I'm not going to get my personal self or identity tied into what's happening with the business. Because think about it, the .com crash, I mean, what can you do? And then, by the way, in 2008, there was yet another Wall Street crash, right? Or if a war happens somewhere and the markets kind of go crazy. I mean, these are entirely outside your control. Right? You may still be working, you're just as smart and just as hardworking and doing all the right things, but all of these things affect your business, right? So you kind of have to just develop this core mindset of like, okay, I haven't changed. Yes, the things I have to do might change, the strategy has to change, the business has to evolve, but I'm not going to, make it about me or lose confidence in myself, because it's kind of, this entrepreneurial journey is strange, right? On the one hand, you need this insane amount of confidence to say, I'm going to do the impossible or the difficult thing. but at the same time, you got to be very paranoid and very humble and very, grounded, saying, okay, what's not working and how do I fix it and so on, right? So you can't have, anyway, the short answer is you can't have these sort of psychological mood swings. You kind of have to,
ground yourself.
Yeah, just ground yourself, saying, look, yes, I have confidence in my abilities, but I need to figure out these other things and solve it. And I think those are some of the coping mechanisms that I've learned, and through a lot of bruises and battle scars.
In the same vein, what would you say a founder should have, like key attributes that a founder should have?
I think maybe the meta level thing would be sort of growth mindset and just a lot of grit. Right, I think those two go a long way. Right, I could, ultimately, you're learning, you're evolving, and maybe also a sales mindset. I think most entrepreneurs don't realize that the founder's job is just constant selling. I mean, you're really a salesperson because when you're recruiting employees, you're selling to the employee, you're selling to the investor, you're selling to customers. And you're selling to media, right? You're selling to everybody all the time, and ultimately, the best salespeople are the authentic people who can sell with conviction, because they believe that they get others to believe in it, and therefore, it kind of works. So yeah, I think emotional maturity helps, but if you don't have it, you'll develop it very quickly because you'll get knocked around so much so quickly that it happens. I think even intellectual humility gets developed very, very quickly because your customers will tell you, or the market will tell you, or investors will tell you. There's so much rejection along the way, so you need, like I said, perseverance and grit in particular. You have to be able to deal with the innumerable challenges that'll come up all the time, and you just sort of, but in spite of all that, right? Now, I don't want to make it sound all negative. Ultimately, at least what keeps me going is it's sort of, when you focus on the big picture, the fact that you're going to build products maybe used by millions of people and create a lot of value and wealth for your customers and for your employees. I think that makes all the pain worthwhile, right? So it's not by choice, like in my case, for example, there's a lot of late nights, there's a lot of travel, there's just a lot of constant activity, but I try not to me that doesn't bother me, because there's a bigger picture that I see and a higher purpose that kind of keeps me going,
What advice would you give to those founders who probably don't come from, say, an IIT or an MIT? It's likely to be more challenging for those founders to develop the kind of network and the ecosystem around them. So how do you develop a network when you don't have a ready-made one?
Well, so firstly, the premise of the question is wrong, right? I think those founders actually have great advantages, more so than, let's say, an IIT founder like me, right?
How so?
I mean, I'll tell you in my experience, my personal experience, I'm not talking for anybody else, if you are blessed with a great academic and exceptional academic background, you kind of assume, saying, look, if I work hard and I'm smart, I'm going to get the grades, because the whole exam system in schools work that way. And then you come into the real world and it doesn't work that way. Saying you're still smart and you're still working hard, but because the market crashed, your startup is failing and you're just not prepared for it at all, right? Meanwhile, somebody who didn't get it handed on a platter, right? They've always had to work for it, struggle for it, and so on. They've already built some of those, the grit, the perseverance. They often have a chip on their shoulder, saying, I want to show the others how good I am, and so on. And you need that, right? So let's start with that firstly. I mean, I had to kind of develop it later. I think, well, somebody, so ultimately, so that's an important part of it. They already are blessed with grit and perseverance. You're right that the networks, I mean, some of the best schools, and often there's a signaling, right? Sometimes investors assume, oh, if he's from IIT, he might be better, and so on. So that can be a negative, but every every entrepreneur they'll have their strengths and weaknesses, and you play to your strengths and try to minimize your weaknesses. So if you don't have the network, but you have more perseverance, you'll work harder to reach out to more investors and convince them, and even if it's 1 in 100, well, you go reach out to many more people to get that conversion rate.
How do you pitch to VCs when what have you learned basically on how to tailor your...
I think, first is I try not to do slides, believe it or not. I think everybody talks about having PowerPoints and running through it and so on. And I've actually found that simply having a conversation, a natural conversation that flows through your thought process, right? Because that allows you to engage and maintain eye contact and understand and make sure that they are really understanding what you're saying and why. I've also learned that, you need to to sharpen your story a little bit, right? Instead of going into too much detail in the very first meeting, I think you want to lay out the big picture. You need to have crisp sound bites, for example, which also shows that you've thought about your story and summarized it for somebody to be able to understand the essence of it, right? And then, of course, if they want to dig deeper, they'll ask you, and then you can have a deeper conversation or go into some of the specifics. But oftentimes, because you put yourself in the investor's shoes, I mean, they are trying to make an assessment about the overall idea, saying, do I even roughly like it enough to spend more time to investigate further, right? And I think you can save yourself and them a lot of time by having, what they say, your elevator pitch. Like if you're stuck in the elevator with somebody for 2 minutes, can you tell the whole story? Or like in 30 seconds, can you tell the whole story? And then can you explain the business in like 5 or 10 minutes, right? And then, you go into slides and so on. So I found it, it's much more effective to just have a conversation. And then, of course, there are some tactical things. There's a lot of information on the web, but you want to say, okay, what's the problem you're solving? How big a market is it? What's your solution? How does it solve the problem? Why is it unique or different? What's the competition like? How would you make money? What would you charge? And so on, right? So I think, and then maybe some sort of financials at the end of it. So you kind of, and you can explain that in a narrative form, in a simple conversation. And I think that's really important. I think, sometimes entrepreneurs are so eager and so anxious to squeeze in all of their knowledge into every slide and then force the investor to go through every slide when, that's not how some of these decisions are made. They want to get an overall sense of it and do it. So I think I would suggest doing it, a little differently. Yeah.
Do you invest in startups?
Yes, I do. I mean, I've invested in dozens of them and so on. And sometimes it's hard because I still have an operating role, a day job.
Yeah.
It takes work, even just evaluating and so on. I mean, VCs talk to hundreds of companies to decide which ones to do it or not. I don't have that luxury of time to be able to do that. But but people that I know, or people or spaces that I understand or that are related to what I'm familiar with, there I can make a decision much faster. And so,
What are the metrics that you use to screen? I mean, like a dipstick sort of a test.
Well, I think, like I was saying, look, if it's very early stage businesses, typically in angel rounds, it's just the team and the market opportunity or the space that they're targeting. And if you have, so those two things. So firstly, in terms of the market, a little bit, if I don't understand, if I don't know, whether it's valid or not, I mean, I try not to. I mean, I'm not a financial investor. I tend to be much more of a,
strategic.
It's a little bit more strategic, and I want to engage with the entrepreneur. It helps me learn about, what they're doing, and they can learn from my experience and so on. So, there may be lots of unrelated businesses, but if I don't get it, I mean, that would usually be the exception, right? And then on the team or the people side, I think it's really I mean, that's a judgment call. I don't know if there's any clear metrics necessarily. If you know the person and have some experience, I think that helps. I think if you don't know, then if they're referred by somebody you know, then that would be good and helpful as well. And then, just in having a conversation you can tell partly whether they can deal with it, just, how are they thinking about the problem that they've defined? How are they explaining that opportunity? How are they interacting or answering questions, responding to suggestions, and so on? That gives you a sense of, one, do they have some confidence and conviction, but are they still open to other insights and ideas? Do they have something in their background that tells they could persevere through challenges? They can, innovate or, adjust and adapt as the market circumstances change. I think those are all the things you're trying to gauge, that I mentioned earlier. Salesmanship, that you'll know right away as they're trying to sell, and so on. And the hardest part sometimes, just to finish, is, oftentimes you'll find like diamonds in the rough, right? So it's not like you're going to find the perfect polished entrepreneur, because if they've, gotten that far, then chances are they're not raising money. So you kind of have to look beyond the superficial. Right. So it's not just like I was saying earlier that they went to a good school, or not just that they're smooth talkers, right? Because sometimes they may not have those criteria, but still might be something real or interesting underneath. So you try to get past the superficial as well to look and try to understand a little deeper.
To conclude, is there any new space that you'd like to get into, which could be your third effort?
Well, right now in some ways it's both obvious and very difficult, which is AI. Correct. Right? I think AI is such a breakthrough capability, and I'm not going to go into all the details. So on the one hand, there's a ton of opportunity there because it's going to disrupt everything. But on the other, it's also, there's going to be lots of startups and lots of companies trying many different angles and so on. It'll be a very crowded space as well. Now, it doesn't bother me in and of itself, because if I were to, so it's not just the idea, right? Because it's also the execution that matters, right? The ideas sometimes are a dime a dozen, but how well and how effectively you execute and so on. So I would still bet on my own ability to execute and execute well. Even if some others are doing it, we can do better. But I think broadly, if anybody is looking at the space right now, that's the place to look. Though it's not just AI in general. I think, unless you're doing some deep AI research, then it could be a general space. But otherwise, an AI application in some area that you're familiar with, where you understand the problem better than someone else and, can build some creative solutions and so on. That's sort of an easy one, and it's also a space I'm familiar with and looking at. But there are many others, right? I'm sure crypto will still come back in some ways. There's like bio and climate. There's so many other large spaces. Frankly, you just look at any major world problem, and that kind of tells you either there's a problem we're trying to solve, or there's some new technology that we are trying to find applications for. It's one or the other, and they'll give you hints about, interesting brand new spaces to go after.
Interesting. It's been wonderful. Thank you so much, Beerud. Thank you again.
Thank you. Thanks for having me here, and hopefully I can help or inspire some budding entrepreneurs.
Yeah.